Hello, traders. It is Wednesday, the 7th of March, 2018. Thanks for joining me today. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. I'm having a bit of a sneezing fit, so I'm going to have to take quick breaks to sneeze so that I'm not doing so in your ears. Sorry about that. Very little sleep these days. The overall market stance this morning is indices are lower. In case you haven't heard, the chief economic advisor to the White House, Cohen, has announced his resignation right after the market closed. How convenient, the timing, which caused about a 30-point drop on the open. On the reopen of the Globex session at 6 p.m. Eastern. And the market proceeded to test down to almost 2680 and just now retested or attempted to retest the overnight low or yesterday's low around 2710. So the overnight session has been relatively busy. We're seeing allocation to safety this morning. The items that are up, other than an outlier this morning, which is the DAX. The DAX is up 60 points, 61 points, or 0.5%. The rest are all safety instruments, Euro FX, U.S. Treasury bonds, 10-year note, U.S. 10-year note. The Eurobond and the Japanese yen are positive. The laggards are the Dow, S&P, and so on. Crude oil is trading down 33 cents at 62.27. So, very interesting trade yesterday. I'll show you the overnight chart. I thought I just happened to be here doing homework, and I just saw some really good opportunities during that session. I'll look at that with you. So that's that. As far as looking ahead today, what could impact us? Of course, this ongoing tariff war, trade war nonsense is ongoing. We had ADP and trade balance this morning. We're expecting gasoline inventories today at 10:30, and we're expecting consumer credit at 3. Both times are Eastern. So that's what's ahead. Lots of Fed speakers. We had a couple already, and we've got the beige book also at 2:00. So 2:00 beige book, 3:00 consumer credit, and then crude oil inventories for those crude heads. Okay, here's what we expected yesterday. Oh, while I'm at it, a quick public announcement. Just a reminder that tomorrow, it's March 8th, so that's wrong. Looking at the wrong date. So March 8th, we have, let's see, get rid of this. March 8th, we have, at 8:30, we have the rollover at 8:30 Central, 9:30 Eastern. That's the pit open. We officially move to the June contracts. Tomorrow, I'm going to be trading the 8. Okay. So starting tomorrow, I'm going to be quoting and trading the June contract. So all of my levels will be back adjusted in the morning, and I'm going to be quoting that contract. So just to avoid any confusion, just understand that if my prices are off, it's because I'm trading the front month, the official front month. Many people wait for the volume to transfer over, so they wait till about Friday morning, Friday afternoon, and then switch over when the June volume becomes equal to or greater than the March volume. I don't bother with that. There's plenty of liquidity. The caveats of rollover is generally that week is not very great, at least for me, to trade. So I'm cautious. But with the news flow, it may be pretty good. Your volume delta is going to be off because the delta is measuring volume hitting the bid, lifting the offer. And this would be happening on calendar spreads and just people rolling their positions from one contract to the next. So the delta is going to be off and volume will be higher than usual. To review yesterday, the expectation was for the market to test lower. We were opening in a gap, slight gap up from the prior day's high on a week high. The expectation is for a push through the overnight high and then an impulse up, and then the market starts making its merry way to 27.50, which is a major price above. That didn't happen at all. The second scenario is that we open up, push higher, fail to get continuation, and then we fall through and start testing the point of control and the close, which are basically the same price from the prior day. And then we start working our way down to the 27.0650 area from the prior day, which is the start of the low volume node, and then sideways. That did not happen either. The closest match to yesterday's scenario is scenario 3. Not quite what I was looking for, but once the market could not get back out of the range, it was obvious that we're likely to test down into 27.15. It got down to 27.10. Tested 27.10 quarter. 27.15 is the MC point of control. MC point of control since the sell-off day of February 5th. So that's the big magnet in this area, and it did test it, and it ended up pushing to 10 and a quarter before taking a bounce and trading sideways. This is what yesterday looked like. Here we go. Notice a 4-tick Renko fitting comfortably inside of a single screen here. It tells you how much rotation there is. The rotations have been okay. We're still receiving several 6-point plus rotations, positive and negative, throughout the day. So the market still has some volatility in it. Let me turn down my news feed here. And then overall, we ended up having a balanced day. Once we, I was actually looking for, in this stage here, I was looking for the market to pull back and continue higher, take out the overnight high from yesterday because it didn't do so in the morning. And then I was looking for the continuation to 27.40. And what it did is it just rolled over and fell through the IB low. And so given that it's already tested the prior day's close, the expectation is for it to test the 15, the MC point of control, and end up pushing to 27.10 and a quarter. And then all things looked like we were going to hang tight on the lower end of the range, filling in this area here. But then we get this strong impulse up from 27.14 quarter to 27.30, about 16 points. And then we just went sideways from there. There wasn't much to trade in here except from the outside in. So overall, balanced day with a profile that had an upward skew. It's kind of a P shape. If you look at the profile here, it looks a little bit like a P shape. Okay. So that's what we had yesterday. It's what we take out of yesterday's profile is it didn't go neutral. It was a normal variation day, and it held on to the upper distribution from Monday after the rally. So the market still Relatively strong, pretty decent taper at the top. It looked to me like if we came in and we were closing, we closed at 27.24 right here. You see this Cohen resignation SOC. That's really the target for today on the upside, for the market to resume its auction like it was the day before. But the expectation is we open in an open auction in range, in value today, test lower, impulse higher. That was the plan last night. Impulse higher, and then start working ourselves to 27.40 and then eventually 27.50. That's what we were setting up for, in my opinion, coming into the close yesterday. But instead, we had this tumble. Let's see what that looked like. There we go. This is how we tumbled. So I did these stock zone levels right after the close, and then we reopened and we immediately started testing testing a lot of these levels already. First test 26.90, which I have listed as a level here as a zone. It gapped down. We reopened for the half-hour period between 4:30 Eastern and 5. With these two bars, stayed in line, nothing happened, and we gapped way down, and then tested 26.90. And as I indicated yesterday on Twitter, I'm looking for a continuation lower. The continuation lower is expected to hold steady at 85.25. It did not. It pushed through to 81.25. Then we get this big move up back to 27.05, which is another 27.06, which is another zone, and then it just drifts back down to 85.25, back to 27, the 27.04 to 27.06 zone, or 27.05, 27.06 zone, and then just bounces back into the 96, which we've been playing since last week, back up to the 27.05, 27.06 zone, back to the 96 zone, and then now we're holding steady in the 27.06 zone. Notice just moments ago we tested the prior day's low and came up short 2 ticks. The market is resuming its auction from what I'm seeing here. That's the recap. Let's take a look at what we're expecting for today. So today we're opening in an open auction. The first thing I would like to do is draw the profile of this region here. So if we draw a separate profile and look at where the market is poised, we have a very clear low volume node here at 26.96. No surprise there. That's a key zone that we've had since last week. 26.96. We're in this upper distribution of this area. We're holding 26.96. So basically my plan today, as long as we stay above 26.96, I'm expecting an open auction out of range. I'm expecting a small attempt lower, and then I'm looking for it to resume to 27.15, consolidate, push into the next zone at 27.19, consolidate, and then eventually get back to the SOC, the scene of the crime from yesterday. That is scenario number one. Scenario number one is responsive towards yesterday's auction. Market does not like uncertainty, and having another key figure in the U.S. government resign is a big mark of uncertainty, especially since he's the economic advisor. And so now we have to look at the market has to consider those implications, and then the auction resumes, and that's why we mark the SOC. Okay, so that's the key play. Now, if we open in an open auction out of range, attempt to push higher, get into 27.15, get tangled, and fall back through, then I'm looking for it to retest the 2690 initially, this zone here, bounce back and forth, and then eventually let go and move all the way down to the low of the rally day, this thinner profile day at 2674. That would be the second scenario. Okay. My third scenario is to play in between, but eventually the third scenario is to just stick around in between, consolidate, form a very fat profile between 2696 and 2710, and then eventually break higher and break through. And that would give us about 35 points of range on the way up. That would be the third scenario. In either case, I have to trade what's in front of me. Remember, these scenarios are not intended to be something the market duplicates, right? So the idea here is not we come in and we predict what the market's going to do and just trade what that does. The scenarios simply tell us how things might flow based on the auction, and then and then respond to the order flow and how the market is positioning itself based on market generated data, right? So the scenarios simply say, okay, you've got some range, given the range stats, the recent range stats, these are the targets, and this is what we're looking for. But the market might completely shrug off this Cohen resignation thing, and if it does, you're going to see a lot of money reallocate to risk, which could result in a big push, wider than we expect push. I mean, yesterday's range was 2710 to 2732.75. So in what seemed like a boring day yesterday, it's 22 points of range. 22 points of range in a boring day. So it's not crazy to expect something wide today. The close to close expectation for today is around 30 points. Is expected to be within 30 points. So that plays out pretty well with these three scenarios. Just remember, we're not trying to predict what the market would do. We're just laying out plans for how things may shake out based on the scenarios we have in front of us. And really, it's about recognizing what it might do and then positioning yourself based on other factors, including, just the order flow and whatever else you need. Okay. I want to remind you again, tomorrow's rollover. Okay. So we're rolling into the June contract, and it's important. It's the 8th. It's important to remember that starting tomorrow morning, I'll be quoting June, and that'll be the beginning of the June contract. Will be in full swing after next Friday, which is expiration Friday. Everything goes back to normal, delta, volume, and everything else. Good luck.